Hello and welcome to another update video about Doge. Just want to take you through the updated Doge chart. While the previous support level at 11 cents isn't broken yet, the extent of the current correction makes this interpretation more likely. It just has a minor impact on the bigger picture. Actually, it would be more bullish looking at the bigger picture than the previous wave count that we talked about, but it also allows for a deeper pullback. So that's the trade we have to do. In addition to that, it makes the chart less reliable. So yeah, there are some good things. There are some good things to talk about. There are some bad things to talk about. The problem is that the deep pullback we see now, or the extent of the pullback, make it likely that at least maybe something more bearish, but at least here the let me take the red line out. At least a B wave is playing out. We talk about wave B of 3. We can interpret the move up as an ending diagonal potentially from the 2022 lows. Wave 1 to the upside, wave 2 to the downside. That was the wave 2 low in June 23, and we could now be in a third wave rally. The third wave, however, hasn't really taken off yet. Would have been ideal to form one more high in the previous interpretation. Now I have to assume that the wave A is topped. Then we get a B wave pullback now. Wave 3, let's say first ideal target would still be 27 cents. But the problem is, the problem is that this is only a diagonal which cannot be trusted. So until we see a reaction to this support zone and maybe a first 1-2 setup, this chart is really low probability. When would it increase in probability, this roadmap? Well, we would need to see a first small 1-2 setup of wave C. What is a 1-2 setup? 1-2 just means that it is the first rally which needs to fulfill certain, let's say, requirements, and a first pullback forming a higher low in this C wave rally, which is a 5-wave move. So if we can get the waves 1 and 2 of that 5-wave move completed, then this is a so-called setup that could set us up for a third wave rally in wave C of 3 to 27 cents. At the moment, this is just catching the falling knife, and the 7.3 cent level is critical support. Below 7.3 cents, really, there isn't anything bullish left on this chart. There just isn't. I mean, there are other ways how this could be interpreted, but it's just, it's low probability. Doesn't mean it's necessarily bearish, but it's a low probability. This could turn into a triangle. Bear in mind, this is a wave 4 here. So assumed currently is that the wave 4 is finished in 2022, but nothing stopping the market. Oops, this is locked. To still be working on that wave 4 and maybe a triangle, but we don't have evidence for a triangle at this stage. For now, I'm watching this support area. We'll see if there is any reaction. Any break below the 7 cent level, will likely cause a retest of the 5 cent level or range around those bear market lows, but that would be problematic and would increase the likelihood that a long-term top has been put in place in 2021 and we might never see all-time highs again. So the 7.3 cent level is really critical. That really needs to hold. Please be aware of the risk here. Looking at the shorter time frame, this is just here the 4-hour chart where we see this A wave top in the larger third wave. Within the B wave, which is now unfolding, and that support area, we are completing currently wave C probably, or we are in the midst of wave C. So we have an A wave down completed. That was B wave rally into the May highs, and then and then this could now be a C wave. Next support 11 cents, 9.3 and 7.3. In addition to that, we can calculate the A equals C target. That means wave A and C usually have the same length. Now, depends a little bit on where I count the A wave completed. I can say it was the top or it was down here, but I'll go with the top, and it will be just sort of 8 to 9 cents. Yeah, this is the 100% extension target. So just below the 9 cent level, just below the golden ratio level, below the 61.8 retracement. So please be aware of that. I can leave that on the chart. Why is that important? Because if this is really a C wave down, then it should still go a little bit lower. And we could try to add a price channel as well. These corrective price channels, sometimes they help, sometimes they don't. I think it doesn't harm as long as we know that these corrective price channels, sometimes they are not so reliable. Okay, but we have 2 touch points down there. We have 2 to 3 touch points up here. So it is a relevant price channel. Let's see if the price can react to it. That's the update about Doge. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.